What's up, everybody? Welcome to the High Performance Trader Weekly Recap, right? So today we're going to break down the week ending November 15th, 2024, right? It was a phenomenal week. We absolutely crushed it on the team, right? So I wanted to take our weekly recaps on YouTube Live just for this 1 week so that everybody could kind of see what we do and kind of show the world, right, what it is we do every single week and how that helps us become better traders, right? Because if you want to become a better day trader, you have to take the time and go through your trades. You have to go through your strategy. You have to go through your edge. You have to make sure it's still working, right? You have to make sure that you're reapproving it, that you're modifying it, right? That it's still upstanding in these market conditions, right? And this is the time that we do that. And we're going to break down the week. It was a phenomenal week. One main thing that I took from this week was using the 1 hour time frame. It has helped me tremendously with not rushing trades, avoiding FOMO, not getting caught on the wrong end of the market. And one of the main reasons why I was able to figure this out, right, was the data collection, right? So you guys have seen, right? We have been doing an extensive data collection on our edge, on our strategy. And what I do and what I take from that is new tools, new understandings, more wisdom, right? Getting better at spotting the overall trend, who's in control, and using that information, using the 1 hour time frame to put on better setups, right? So let me share my screen over here so that we can get, hold on 1 second here. What? Okay, there we go. Okay, now we're gonna go entire screen, share. All right, cool. So now that we got that, so some things I want to show you guys real quick, right? So I was just going through the data from the week, right? So what I'm gonna do here is pull up. This is the Excel sheet that we've been using, right? And I still have to modify this. This is what, if you click the link on my website, right, you'll get access to this. It's extremely valuable, right? So this right here, and what I'll do here is just pull up, where is it? Well, here we go. Nope, this isn't it. So we're just going to dive right into the week, right? Because the trades in that is what we're going to be talking about. Veterans Day was 11/11. We took one setup here in the morning. It was a beautiful, very simple setup. You're going to see, right? Price. So basically, what do we do every single day, right? So every single day we have a very simple approach, right? We identify our pit numbers, we identify our critical levels, and then we make moves off them, right? So this was Monday. We're just actually going to dive right into Tuesday, and then we'll do Tuesday, Wednesday, Thursday, Friday, right? So this was the week right here. We started to get some filling, and let's dive right into Tuesday, right? So Tuesday right here, I took one setup and it was off the morning. Beautiful, beautiful example of our strategy here, right? So what's our strategy? Identify your critical levels, right? So let's just run through. As I use our pit number indicator here, it really helps identify them, right? So we have open print, right? That's established at the open morning price. We have end of day, right? Which is this gray line. We have previous day high, and then we have previous day low, right? So pre-market plan is whoever can control end of day, 1 hour DEMA, right? Or I'm sorry, the 50, and then the 1 hour DEMA, I'm going to look to trade with. Right. So in the morning, we got a break off open print, a nice retest of it, but I'm not trading this because there's no cross, right? Without the moving average cross, there's no trade, right? This is what has really helped me remain patient. Do I miss setups? All the time. I miss setups all the time because of that principle, but I'm no longer logging losing trades in that manner, right? And that right there is the goal. It's okay to lose trades. It is unacceptable. It's not okay to continuously make the same losing trades, right? So if I have to stop taking certain setups, but I miss some here and there just because I've modified my process, that's a win, right? And understanding that keeps me from going, hey, Josh, you're getting buyers here off open print. You should long it and target previous day high, right? Instead, I go, nope, there's no moving average cross, so I'm not taking the trade. And then price then reverses. Sellers come in extremely strong and fall below the 50 EMA, right? So now we're below the 50 EMA. We come up, and I'm going to whip out the 2-minute because it just was, it showed it perfect. This is the, hold on, which day? Right here. That was Monday. Okay, right here. So this was the trade. Fall below open print. We come up. We retest this zone, right? We retest the EMA cloud, and then we start to get selling. So I enter the market short on this red candle. Why this red candle? Open print, rejection. On the 5-minute, we get the moving average cross, right? Let me whip out I'm going to put the 5-minute up here on the left. Right? So look, 5-minute, moving average cross, fall below the 50, right? We're below the 50 EMA. At this point, I'm very bearish, but I'm not entering, right? I'm not entering here. Why am I not entering? Because my stop loss, if I'm going to enter this, I want to be able to hold the trade through a pullback. Look how far away the 9D EMA is. 9 times out of 10, you're going to get a at 9. Therefore, I'm not entering this trade short. Instead, I allow price to rip up into that level, and I wait for the green bar right here to be ignored. So at this point, I'm entering the market short, and my stop is above the green candle I got in. Or I got the green candle before the candle I got in. And you'll see here, price sold off, came up, almost stopped us out. I always keep it a little bit above it, right? Because I don't want to get liquidity grabbed. Notice how the 50 EMA on the 2-minute is lining up with it right here. And then we got a beautiful sell-off down to previous day low, right? Capturing this move right here. This was a phenomenal setup. I love this setup. It was very pretty, right? It was like, and it took a lot of confidence. But once again, this is why we collect all the data, right? Why didn't it pop up? Having issues pulling up my, but even here in the Discord, right? This is why we collect the data. You collect the data, you study the data, right? Like right now, I'm completely aware to the fact that this moving average cross, this setup, this strategy has a 72% win ratio for the last 2 months, right? And this month, I believe, is going to be much higher. We're obviously not done with it yet, but judging by the first 11 trades that I've took with this criteria, I mean, they've all been, I think I had one loser in the last 11 trades in the last 15 days, right? Trading the strategy. So once again, the conviction's there, right? This is the trade we took right here, logged in the Discord, right? And this is the power of collecting data. Every trader asks me about conviction, about confidence, about being able to pull the trigger, right? If you're struggling with pulling the trigger, you haven't collected enough data, right? And if you don't have specific requirements to even collect data on, then you're failing completely, right? You need a specific approach that's repeatable, that you can collect data on and build conviction on, right? So this was the trade we took. It was beautiful. It was absolutely beautiful. That was the only trade I took on Tuesday. I've been trading way less. Like I told you guys, I took 8 trades this week. 8 trades. And my trade selection has been, like the frequency of trades that I'm taking has dropped tremendously. And it's been serving me extremely well. Right? When you trade less, when you increase your criteria and you trade less, you do way better. All right, so now let's do this. Let's get rid of some of these lines here. And we will go into, or actually, no, we want to keep these ones. All right, so now we're going into Wednesday, 11/13. I just made a YouTube video on this. It's still uploading. This day was phenomenal, right? Really good day. I want to show you guys once again how I'm using that 1 hour and how it helped me. So if you look here, this is the 1 hour time frame. So every day I do a pre-market plan on the 1 hour. And I go, all right, guys, I'm looking for a bullish and bearish scenario. If buyers can hold end of day, if they can hold the 1 hour 50, right, I'll look for longs targeting previous day high and previous open print, right? If buyers can't hold this, I'm going to look for shorts targeting pre-market low and previous day low, right? So there's two scenarios. She either goes up or she either goes. Once again, that happens 88% of the time. 88% of the time, there is going to be a move from open print to previous high or from open print to previous low. There's an 88% chance that happens. I've done the math. I've studied the data. Knowing that gives me tremendous, it simplifies this game so much. Now, once again, I didn't say 100% of the time. I said 88. So there's still a 12% chance that you're going to get caught in chop. And it doesn't necessarily mean the move's going to happen when you want it to, right? What I'm saying is there's an 88% chance that price is going to go from here to here or here to here through the hours of 9 to 4 every single day, right? So with that understanding, it kind of narrows it down to a 50-50 perspective. So what can I use to understand if buyers are holding open print or if sellers are, right? That's where I use EMA. I use the 1 hour 90 EMA, right? So that right there. All right, never mind. So now that right there is what I use to either target the highs or the lows, right? So once again, there's an 88% chance that price is going up or price is going down, right? How can I make an educated guess or decision, right? Based on what tool can I use to make that decision? The 1 hour 50 in the 1 hour 9, right? And I need to have a general understanding of who's holding the open, right? So now we're going to go on this chart to this day right here. Okay, price opens up and we look like this. So now I'm going to drop into the 5 minute and the 2 minute because now it's up to figure out who's controlling the level. So this day was CPI, right? This was CPI. There was a bunch of news data that added all this price action here in pre-market, right? So now market opens up. We get open print established and buyers pretty much defend it. Now, Josh, why didn't you long this? Right? Because that's a valid long, Josh. Like, why didn't you long that? Price looks good. Cloud is green. The 1 hour looks fantastic. We had a great upside target. This looks like buyers are holding it. There's one reason I did not long this, and it's because there's no moving average cross. So very similar to Monday or the day before this, I've not saying a moving average cross is supposed to happen, but what I'm saying is I do better. I make more money. I have a higher win ratio when it does, right? So notice what I just said there. I'm not saying it needs to happen or it should happen or I want it to happen. What I'm saying is I do better profitably when it does happen. Once again, this is a product from going through my journal, studying my results, in modifying my process because of it, right? So that is your job as a trader. Your job as a trader is to figure out what works best for you and modify that. Develop a better process. Add or subtract certain behaviors to make that work better for you. So one of those things I've discovered was that I trade better with a moving average cross. Therefore, I'm not longing it. It's that simple. Boom. It's that simple. And it was funny because once I decided not to, guess what happened? A moving average cross happened. So price falls over, and the moving average cross gave us a higher or a lower high, right? So this would be a high. This right here would be a lower high, right? Because we've broke structure. Structure has broke at end of day. So now I'm like, okay, moving average cross has happened. We're rejecting my critical level. Price comes up, and on this candle right here, the 10 o'clock candle, it wiped out that green candle. At that point, I'm in the market short. Once this happens, chart on the right, once this happens, I am in the market short. My stop's above the previous green candle. Bam. In it. Now, there's a pretty valid argument right here where when it comes to stop losses, right? Because at times you could find yourself entering very far away from a appropriate entry, right? Because once again, we want to get in the market where we can accommodate pullbacks. So there's a degree of acceptance that needs to go into this, right? Because, when this sells off, you need to be ready. What this means here is once price falls below open print here on the 5-minute, I'm now pulling up put option contracts and going, okay, which ones am I buying? Right? Like I'm ready. My finger's on the buy button when this, right? Because once this happens, I can't be, oh man, I got to pick the strike now. I got it. No. When this happens, I need to be in the market short, which means I need to be ready. There's another argument here. Josh, why didn't you enter on this candle when it wiped out this green candle? Well, look at the gap here between price and the 9 on the 5-minute, right? So once again, I will enter a trade if we're extended from that 9. I don't care. It is what it is. Happened to us Friday. I just won't do it. I miss out. But once again, I'm do better when I implement that rule, that principle, right? I make more money when I do it. So at the end of the day, guys, you got to ask yourself, are you here to satisfy your emotions, or are you here to make money? And the answer is we're here to make money. We're here to make consistent money. At the end of the week, you want to look back and go, all right, you know what? I made money this week and I'm able to continue to trade. Not, I satisfied my emotions today and I feel good about myself, right? Because if you're making decisions like that, it's going to cost you, right? It's not repeatable. It's not something that's going to work, right? So as simple as that, right? Like, yeah, I could miss a short play here, but I'm not going to enter because it's breaking one of my rules, right? It's so important to view the market that don't. That's one of the main reasons why we're not making consistent money. That doesn't mean not take the trade, right? It doesn't mean accept that you missed it and you're not going to do anything, right? It means if price rips back into this and sellers respect it, I'm going to get in because I don't want to miss it. And then price sells off and we took profits right here down at pre-market low. And the main reason we did is because how extended we got, right? Price sold off very quick. I'm watching the 2-minute. I'm watching the 5-minute. 2-minute, beautiful trend. 5-minute, extended, which means I'm booking profits onto the next, right? So that was a really good trade. It sold off really fast. It was an 8-minute trade. And then we went into, I initially I was going to be done. I was like, one and done. And then I was like, hey, you know what? If my criteria pops back up, I have to take it, right? Because no trade special is really build. I'm trying to build the belief in my mind that no trade is special. The only thing that's important is repeating the process. That's it, right? If I can constantly, that means if I see my edge, I want to act on it, right? It doesn't matter how I feel. It doesn't matter if I'm done for the day or what. I want to get to the point where I'm just shooting off only at my strategy, with no emotion. Or not no emotion, contained emotion. Because we're never going to get rid of emotions, guys. It's not my goal, right? My emotions are a good thing. Could you imagine trading without emotions? How it wouldn't be fun. right? Like this is our life. This is our livelihood. This is our purpose, right? So it needs to be fun. We are a very good part, but we have to be able to make decisions even when we're feeling afraid or anxious or doubtful, right? We need to put our trust in the strategy, in the probabilities, in the statistics, right? And develop that conviction in it. We went long here on the second trade at 11:05, and this trade felt very uncomfortable, right? Just like most do. Most do. Like, Josh, why did this feel uncomfortable? Well, we were longing in the high of day, right? There was a mega seller right here. Look at him. Mega seller. And I'm longing into it, right? Well, this is a tool that the HPT members learn. It's called defining acceptance, right? So the main reason I longed this was the 1 hour time frame and the moving averages here on the 5 minute, and that green bar completely wiped out that red one. Strategy is critical level, right? Print, we got end of day. This is a sweet spot. If you can understand, if you can define who's in control of this level, you're going to make money. Because once again, the 50-50 perspective. There's an 88% chance that price is going to go here. There's an 88% chance that price is going to go here, right? We don't know when it's going to happen. We don't know how it's going to happen, but there's an 88% chance that one of those is going to happen. I've been logging trades for almost 4 years now, and if you go through all of them, you will realize it is a very sliver chance that the day's just going to be chop and it's not going to do a market imbalance. It's very low. So say that means there's an 88% chance you're going to get your trade. What I said was there's a percent chance that price is going to go here or here. So now it's up to us to find a spot where we can get in with managed, controlled, defined risk, and after identifying the acceptance, right? And that would be this candle, right? Red bar, ignored, in it, stop below it. This was about a 70-cent stop, 60-cent stop. Once again, that's something you just need to accept, right? You need to accept that or don't put it up, right? But I found you got to be careful. And, well, basically, you can see it. What did we get in at 11:05? This candle right here, the 11:05 candle. So I ended up getting in. If you see this on the 5 minute, look at it, right? 2 minute entry would be here at around 11:10, 11:12. So even if you see a red bar ignored on the 5 minute, drop down to the 2 minute and wait for a red bar to get ignored on the 2 minute, right? Like if you're struggling with